Millions of us are struggling to afford the absolute basics of modern life. I mean, buying a home, getting a car, just keeping a small business alive or paying off a credit card, it feels impossibly hard right now. And why is that? Because interest rates are sitting at their highest levels in decades. But here is the harsh reality, and honestly, this is the truth nobody talks about. Nobody is telling you why this is happening. Nobody is explaining what it actually means for your hard-earned cash. So in this explainer, we're ripping the lid off the whole thing. We're breaking down exactly how this machine works, because figuring out this invisible force is literally the most important financial move you can make. Okay, so think about it like this. An interest rate is basically just the price tag on using someone else's money. But who gets to decide that price? Powerful, unelected central banks. We're talking institutions like the Federal Reserve, the Bank of England, the ECB. They set what's called the base interest rate. And when they pull the strings and hike that base rate, bam, every other rate in the economy goes up with it. Borrowing instantly gets more expensive for every single one of us. So you gotta ask yourself, why? Why did these central bankers suddenly decide to just aggressively hike rates and squeeze the life out of the global economy? Well, this might shock you, but this entire massive global squeeze, it all comes down to just one single word. Inflation. Yep, that's the culprit. It's the absolute monster hiding under the bed. Inflation is literally the only reason central banks slammed on the economic brakes. But to understand why it got so bad in the first place, we have to rewind and look at the crazy chain reaction that sparked it all. Let's jump back to 2020. The pandemic hits, and governments basically panicked. They started printing trillions of dollars just to keep economies on life support. I mean, in the US alone, over $6 trillion flooded the system. But look, when you have all that extra cash chasing the exact same amount of stuff, prices go wild. By 2022, inflation had hit a 40-year high of 9.1% in the US and a crazy 11% in the UK. The central banks panicked again. They had only one blunt tool to fight this fire: hike interest rates, kill demand, make borrowing so insanely expensive that people literally have to stop buying things. And look, eventually, this harsh macroeconomic medicine does work to cool down prices. But man, the side effects are brutal. We aren't just talking about governments and giant banks here. This policy is a direct attack on your wallet. I mean, just look at this number, 7%. Back in 2021, the average 30-year US mortgage rate was sitting around a super comfortable 3%. Fast forward to 2023, it violently shot up to over 7%. Think about what that jump actually means for a real human being. A standard $400,000 house that would have cost you maybe $1,700 a month in 2021, today that exact same house costs over $2,600 a month. That is almost $1,000 extra dollars leaving your bank account every single month, purely in interest. Just like that, millions of everyday folks were completely priced out of owning a home. And then we have this completely toxic number, 22%. That is the average credit card interest rate right now. It has absolutely exploded to record eye-watering highs. Listen, if you are carrying a balance on your credit cards right now, you are suffocating under the highest interest costs ever recorded. You make your monthly payment, but the total owed barely even budges. Why? Because your debt is quite literally growing faster than you can possibly pay it down. The system is just feeding off you. And the pain doesn't stop there. It bleeds straight into the broader economy. Small businesses, the lifeblood of our local communities, they desperately need cheap loans to buy inventory, to expand, to hire people. But with rates this high, they are starving for cash. They just can't afford the financing, which is leading straight to sudden closures and massive hiring freezes. So this isn't just about your personal debt. This is actively threatening your salary and your job security. Now, here is the absolute dirty secret that the mainstream financial media completely ignores. If you turn on the news, they act like high interest rates are just a bad storm that rains on everybody equally. That is a flat-out lie. Look at the fundamental divide baked right into our system. High interest rates crush everyday people, way, way more than the wealthy. Why? It's simple. The wealthy do not rely on debt to survive. They own assets, real estate, stocks, cash-flowing businesses. But ordinary people, we have to rely on debt for basic survival. We need mortgages for shelter, auto loans to get to work, and sometimes even credit cards just to buy groceries. So the really crucial takeaway here is this. When borrowing costs explode, the wealth gap gets blown wide open. The middle class gets brutally squeezed by rising loan payments, and the poor are pushed even further into poverty.
But the rich? They're actually cashing in. Their massive cash reserves are suddenly earning massive yields, and they can scoop up distressed assets for cheap. Guys, this is not some crazy conspiracy theory. It is just the cold, mechanical reality of how our financial system works. Okay, so enough about the problem. What can you actually do right now to survive this? How do you protect yourself and your family when the macroeconomic winds are literally blowing straight into your face? We need an urgent financial defense plan. Here are the 5 absolute, non-negotiable steps that you must take immediately to protect your money and actually thrive in this high-interest environment. Seriously, screenshot this if you have to, because this is your ultimate playbook. Let's start with defense. Step 1, you have to attack that 22% credit card debt like it is literal poison in your veins. Drop whatever else you're doing and aggressively kill that toxic high-interest debt. Step 2, if you have any variable rate loans, try to refinance them into fixed rate loans right away. Honestly, even if you have to pay a tiny premium to do it, locking in certainty during a volatile market is worth its weight in gold. All right, now for the offense, because there is actually one silver lining to this entire mess. 4% to 5%. Yep, for the first time in over a decade, banks are finally paying you real money to hold your cash, instead of just slapping you with fees for the privilege. Which brings us to steps 3 and 4. You've got to exploit these rates. Move your lazy emergency cash out of those traditional checking accounts and dump it straight into high-yield savings accounts, paying 4% or 5%. Make that money sweat for you. On top of that, in a high-rate environment, stable dividend-paying stocks and bonds become super attractive. They give you a steady, reliable stream of income, no matter how chaotic the rest of the market gets. And then there's step 5. This is where so many people mess up. Do not wait to buy real estate just because rates are high right now. Think about it. Everyone is sitting on the sidelines waiting for rates to drop. But the exact second those rates drop, millions of buyers are going to flood the market all at once, and home prices will shoot to the moon again. The best time to buy is right now when everyone else is too scared. Negotiate hard on the actual purchase price today, and you can just refinance the loan later when the rates eventually come down. Listen to this absolute ultimatum we've found in our sources. The people who understand this system protect themselves. The people who ignore it get crushed. It really is that simple. Being ignorant in this economy is basically financial suicide. Interest rates aren't just some boring numbers blinking on a screen. They are the invisible force shaping literally every aspect of your life. But hey, now you see the matrix, right? You understand the force. Take the absolute clarity from this explainer and turn it into aggressive action today. Cut the toxic debt, lock in those fixed rates, demand high yields on your cash, and be strategic about buying assets. You've got the playbook. Look, this system might be built to squeeze the middle class, but you absolutely do not have to be the victim. Use this knowledge, play the game by their rules, and start building real wealth, even when the machine is working against you. So here's the real question. Are you going to let this system drain you dry, or are you ready to finally take control?